Alright guys, hello, welcome to my lesson. I'm going to be teaching you guys about simple moving averages and exponential moving averages. This is my first time trying to teach this, so bear with me. Thank you. Alright, so let's just get right into it, okay? On the left side, you guys can clearly see that I have 7 indications. So what I want you guys to add is this 20 simple moving average, which is going to be the green color. The purple is the 50 simple moving average. The orange is the 200 simple moving average. And the yellow is going to be the 325 simple moving average, okay? These lines are going to be telling us a story of how market makers, institutions, short sellers, and regular stock traders are how they're trying to move the price, okay? We'll give you guys an example right now. We're going to go ahead and draw some circles of key support. So obviously the 50 simple moving average has been a very strong support on big pullbacks, right? We'll do that for now. And we also have the 20-day simple moving average acting as support right there. And obviously a very strong support is the 200-day simple moving average if we ever do get a big pullback. Okay, so this is the one-day chart, and as you guys can clearly see, we have a huge move to the upside. It's obviously channeling right now, right? This is all the way since January 2023. I want to show you guys that. Let's go to a different time frame actually, okay? Let's go to 4-hour time frame. Okay, here you guys can see the 200-day simple moving average acting as support. Okay, this is going to be in a bigger time frame for now. See how every time it taps that 200-day simple moving average, it bounces. So if you guys want to go long, that would be a great place for you guys to go long. Okay, and on the 3-hour time frame, same thing, but over here, remember the 200-day simple moving average was our support. The last support would be the 325-day simple moving average. So if it lines up with other time frames, that's going to be a very strong support. So that's where you can go long, okay? Kind of overextended here, but obviously very strong support, right? And I want to show you guys something that I use every day to understand how the market's moving. Okay, obviously from this low, right, we had a huge rally driving the price all the way up, moving along this 9 EMA, right? This 9 EMA is very important because it's the first line of support or resistance, whatever it is. You can see it's always moving around that line, right, regardless of wherever we are. Let's go to a 5-minute time frame here, and it's going to be showing you guys a whole different story, right? Because obviously on a different time frames, the lines are going to be moving differently. So for these lines, typically I like to use for scalping and intraday trading, okay? So the first thing that we see here is that every time we're above all these lines, we're typically bullish, right? We're bullish. Above the lines, we're bullish. So there's going to be these gaps, okay? These gaps between the lines showing as long as we're running this 9 EMA in the 5-minute chart, it's going to be very bullish. But I want to let you guys know that even though we're bullish, the lines always ends up going towards the candles. The gaps tends to close, right, between the lines and the price action. That is usually an indication of, it's possibly time to get out of your long call if you ever got down there, okay? And the reasoning is that everything is about making money towards the upside and the downside, right? There's going to be a bunch of people going long, and there are also going to be short sellers. So right when the momentum is gone, you see all these candles starting to line up, right? They're starting to get towards the candles, getting tangled. That's going to be a possibility and opportunity for people to go short. And what I want to show you guys is that what was support could turn it into resistance. Okay, you guys can clearly see that after this Monday, the pre-market, they started to push the price down, right? It went back up. No, the 200-day orange simple moving average is acting as a resistance. I want to zoom in here for you guys and see a clear story. They used it as resistance, trying to drive the price down. Now that you see that they're driving it down under the 9 EMA, even the green 20 SMA, the purple 50 SMA, they're trying to push the price down, right? And right when we cross above that 9 EMA, hit that 250 SMA, push the price down. So in this area, it's going to be a little tricky because there are a lot of people going long, and now we're in this area where people are trying to short sell it and push the price down, right? So we already know that there was a huge momentum to the upside. Now momentum is dying. So after this day, we're able to reveal that, okay, they're trying to push the price down. Let's see what they do, right? We're gonna wait. Even the 200 exponential moving average right here is trying to show a different story. It pushes the price down. Okay. And then on Wednesday, pre-market, they rallied, they pushed the price up. But remember, there are people still short selling here. So when we get into this Wednesday opening, there's this huge person trying to push the price up, right? Trying to get above all these prices to keep the momentum going. But the short sellers were, they didn't want to lose their money. So they're going to try to push the price down. And you can see that in the pre-market, they pushed the price below the 90 EMA, but had a big buyer. And then we had some candles trying to get back to below that 90 EMA right here, right? We get below it, use the 50 simple moving average as resistance, push the price down, and then you see over here they're trying to push down below the 325 simple moving average here, all right? You can see that right here. Push it down, but there are still going to be people trying to buy it up. So typically on days like these, I wouldn't want to trade this just because it's not going to give us a big move, right? Even though we clearly see that it was using the 200 exponential moving average as resistance most of the time. If you do want to catch play there, you would obviously have to enter a put position at this area right here, where it's obviously a resistance that we've seen. Let's see, 1, 2, 3, 4, 5 times, right? So this is going to be 6 time. You can take a short position right there. That's going to be 241 all the way to 244, 240.4. So about $1.20 move. It's not bad. That could be a 100% play just off a play like that. Okay. So that's going to be explaining the small gist of how I see the price action on there. But that's only going to be in this 5-minute time frame. Okay. So let's say you want to take a put position there. You're gonna want to have multiple time frames open. Let's open 3 for now, okay? IWM. Okay. So we had a circle there. Let's go ahead and sync that globally and see if anything lines up. Do I want to take a put position there? You don't only look at one time frame, okay? You're gonna have to look at multiple time frames and see if multiple lines line up at the area. And let me go here, look for something here. Not really seeing much. 30-minute. Okay, this is good. This is really good. Okay. So if you see the price moving up and down and that you see that multiple times that it resisted, right? We're going to be looking here at the 30-minute time frame. Let's see the 1 hour here. Okay, 1 hour also showing the same thing. Barely see this. But okay, obviously you guys can see that on the 5-minute time frame, we have resistance here at the 200 moving average. Okay. We see that the price is moving down on the 30-minute time frame below the 90 EMA. So as long as we're below this, Over here as well, multiple time frames, right? Make sure you're looking at multiple time frames. There it is, that 45-minute time frame showing the same thing. Okay, right here, we mark it. You see how all of the lines act as resistance. If multiple lines act as resistance on different time frames, that is going to be a great opportunity for short. Okay, so that is just one example of how market makers and institutions, short sellers, are trying to manipulate the price action using the charts to gain an advantage of whether they want to push the price up or down. Does that make sense, guys? That is just one example, okay?